Can you tell us about your net worth today?
From a money point of view, I would certainly say I'm extremely comfortable.
Do you think that retail, normal investors should be really worrying about all of these tariffs and GSTs and alternative payment systems?
First thing I do in the morning before I brush my teeth is see what tweets come from US president. When we make mistakes, and we will continue to make them, it affects millions of investors. Gold and silver has become one of the most dangerous asset class if I take a long-term view. The time to invest in gold and silver is gone.
So what are the sectors that excite you and scare you the most?
American artificial intelligence based company.
How do you identify when is the right time to enter in any asset?
It's very simple. You look.
When is the right time to sell certain holdings of yours?
Selling decision is never an easy decision.
हेलो एंड वेलकम टू अनदर एपिसोड ऑफ द नेटवर्थ शो। मेरा नाम है शगुन और आज हमारे साथ जुड़े हैं ICICI Prudential AMC के CIO मिस्टर संकरन नरेन। आज हम बात करेंगे उनकी पर्सनल वेल्थ क्रिएशन जर्नी एंड उनके ओपिनियन ऑन द स्टॉक मार्केट्स के बारे में। आई एम श्योर आपको इस कॉन्वर्सेशन से बहुत सारे इंसाइट्स मिलने वाले हैं, तो स्टे ट्यून टिल द एंड। सो वील बिगिन विद दिस। व्हेन आई थिंक ऑफ अ CIO, I think of a person who knows everything about the market. You're always making the right decisions. You're always, the right calls all the time. But I think a part of me knows that that's not how it probably is. And I'm sure you've made your fair share of mistakes. So can we talk about that? What were your biggest blunders when you were new to the markets? And how did that shape your ideology about money?
I think one doesn't understand markets, and I have a particular statement to make that everyone thinks of markets from an arithmetic point of view.
Yeah.
But that is completely wrong. So even the best investors in the world like Warren Buffett have made mistakes.
Yeah.
And incidentally, they write about it freely because the number of mistakes they make is fewer.
Yeah.
So if people think investing is arithmetic, they're totally wrong. Actually, you make mistakes, you learn from them, you introspect on them.
Yeah.
And you continuously gain out of the introspection and learnings.
Yeah.
So I started working in 1989, and I was certainly completely, I would say, got caught in momentum in 94, 95.
Yeah.
Because I did not realize that markets can actually correct in such a significant way. And it was something at that point of time, we are talking of a pre-internet, pre-CNBC world. So frankly, when the correction did come in 95 to 98 period, you were lost. And I would say that the number of mistakes you would have made, one big advantage I would say that my investors in ICICI mutual fund had was I had made a lot of mistakes in the first 15 years of my career.
Yeah.
I joined ICICI in 2004 after making 15 years of mistakes.
Yeah.
So that is the biggest advantage that I had, that I'd made so many mistakes. And those mistakes, the difference I would say is that when you make a mistake, and that too a costly mistake, you have to go and introspect. And you have to think how to not repeat the same mistake in the same way.
Yeah.
That's what I learned. And investors have to remember that they can't be mistake-free.
Yeah. I was speaking to Radhika ma'am, and she mentioned that, make mistakes early on in your life because then the cost is really manageable. But if you're a big investor and your corpus is really big and then you make a mistake, that's going to trouble you a lot more.
Absolutely. Absolutely. So because today what we do at ICICI affects millions of investors in India.
Right.
So when we make mistakes, and we will continue to make them, it affects millions of investors. So that is the big challenge that we have at this point of time.
Yeah, absolutely. And I was thinking, you've been in the market for over 3 decades now. I just want to understand, and you've seen all phases of the market, right? You've seen the 90s, the 2008 crisis, and then the post-COVID rally. How do you think investors have changed and evolved over this entire series and this entire journey? Are we now better at handling such corrections, or are we still making the mistakes that we made 30 years ago?
See, one lesson after watching America is that even in America, people get caught by greed and fear.
Yeah.
So there are times when they are fearful, at times they are greedy.
Yeah.
And if you hear people like Seth Klarman or various other people,
Yeah.
you know, they are even the most sophisticated investors in the world, which are the Americans, they go through greed and fear. So it is very nice for us at this point of time to say that investors have changed in India. And they are going to be new.
Yeah.
But I believe that, you know, how greed and fear works, a number of people will continue to make mistakes. And the beauty of this entire investing business, if no one made mistakes, then others can't make money.
Very true. Very true. So you're known for your very contrarian style of investing. And I was thinking, you know, whenever you're going against the market and against your peers, how do you convince yourself, and where does this conviction come from, whether or not your view is correct and contrarian, or what if it's the wrong take? So how do you convince yourself whether or not your decision is right?
See, it's not always. There are times, as I said, you make mistakes.
Yeah.
But what Seth Klarman, who's considered one of the gurus of contrarian investing, says is that you have to do contrarian with a calculator, which means that you cannot just be contrarian.
Yeah.
You have to do calculations after that.
Yeah.
So, for example, if you looked at many of the junk infrastructure companies of 2007, or some of the junk real estate companies of 2007, we stayed away from them because at the end of the day, it was contrarian, but then it was not, it didn't fit the calculator part.
Yeah.
So if you go back to about 7-8 years back, there were a few NBFCs which failed, a few banks also which failed. Again, you avoided them because it is again contrarian with a calculator, because you know, they were contrarian. But when you did the analysis required through calculation, you felt that the risk was not worth it.
Yeah.
So the moment you're contrarian and you later say, I don't care about risk also, then you're headed for trouble. Then you might as well not be a contrarian. It's much better to be a quality or a momentum investor.
Right. And what about have you ever made a bet that you were really convinced about and everyone was advising you against it, and eventually it worked out for you? So basically your most memorable contrarian bet.
No, I think the entire 2018 to 20 period was absolutely phenomenal.
Yeah.
You know, every month you would buy a certain set of stocks, which included PSUs, which included metals, which included telecom. And the next month it would be lower.
Yeah.
And there would be another set of stocks, what they called quality stocks at that point of time, which kept on going up. So all the way from 2018 to 20, I would say people said this can't work because these companies are not as good quality as the quality companies.
Yeah.
But then there's 3 years. It was like, you know, it was like an Agni Pariksha. We had to keep it.
Yeah.
And I would say it happened because, you know, everyone in our company, whether it is the trustees or all my colleagues, they believed that what we were doing is logical. Then it eventually worked.
Yeah.
From 2021, and all of a sudden it worked, and 21, 22 were just absolutely phenomenal for that set of stocks.
Right.
So it is always, you know, if people think that you take a contrarian view and it will work the next day, I think they are in some paradise which doesn't exist.
Right. So, you know, the intent of the show is, of course, to talk to you about the markets and get your view on it. But we want to know about your personal finance journey too. So can we talk about that? What does your current asset allocation look like, and how much money in percentages, if we can get that, have you invested where?
See, basically, I can't talk about specifics, but basically, I'm a big believer in hybrid investing.
Okay.
Because what we believe most is asset allocation.
Right.
And when you do asset allocation, hybrid funds do that job for you best in the mutual fund space. So you pick something in the hybrid category and look at investing in that area. So that is what we believe in most. I mean, I've been a believer that many of the international markets were more contrarian than India over the last few years, except now. Yeah. And now I believe India is the contra market. But if you ask the same question a year back or 2 years back, I would have said many of the markets in the world were contrarian, whereas India was not contrarian at that point of time. So I did build positions in mutual funds which were invested in global areas, because at that point of time, the Indian market had done extremely well, and the global markets, many of the other emerging markets have done extremely badly. That is not the case any longer.
Right.
But I'm still invested in them. But India has now underperformed those markets.
Yeah.
So that is how I look at it. These would be the main thing. I've been a big believer in mutual funds. Post the entry load abolition,
Yeah.
I would say I've been a very big believer in mutual funds. And the industry has been superbly regulated
Right.
in the last 21 years. That if you look at how the industry has moved to supporting the investor, has been so much that it has become like a phenomenal go-to vehicle for any investor.
Right.
And if you go back to 2004, my investment in mutual funds would have been close to zero. Whereas today, the amount of money that I would have in mutual funds would almost be my entire net worth, almost the
Wow.
entire net worth.
Yeah.
And that is the thing. As a person, I'm not a big believer in residential real estate in Indian cities.
Okay.
Because the yields on those areas are very, very low.
Right. Right.
And when your yield is 2%, you don't feel like investing in residential real
Right.
estate in cities.
Yeah.
So that is how I'm structured primarily.
Understood. And you pointed towards global equities, and I was thinking, for a regular retail investor who is not really investing full time, right? This is just a side gig that they're doing. Do you think it makes sense to invest in global equities, or is the Indian market enough to really help you reach your financial goals?
See, I think, today, if you look at it, India has become contra. The rest of the world has done very well.
Yeah.
So I think from a timing point of view, today is not the time to actually easily invest abroad. Particularly markets like US, NASDAQ seem to be extremely overvalued at this point of time. And it's possible that you're having an artificial intelligence stock bubble.
Yeah.
So I would say that that is particularly an area to be very wary.
Right.
But if you take a very long-term point of view, the more assets you are allocated to, the better it is. So if you go back a few years and if you had put money in gold and silver, they were phenomenal assets.
Right.
And today people ask me what is most momentum and in the asset allocation.
Yeah.
I would say it is gold and silver. Because every day when I do an event, people ask me what should I do with gold and silver.
Right.
Gold and silver have outperformed everything else.
Right.
So in the framework with which we invest, gold and silver has become one of the most dangerous asset class if I take a long-term view.
Right.
But if I told that to most people, they would think, what is this?
Exactly. I was actually thinking about that. Gold I think in the last 5 years has really shot up, right? So I just want to understand, for someone who's in the market in the last 5 years and they've entered, should they be investing into gold now, or has that time gone where it could have actually given you, exponential returns?
In my framework, that time is gone. As I told you, some frameworks don't work for certain periods of time.
Yeah.
But in my framework, the time to invest in gold and silver is gone.
Okay.
The only way you can invest in gold and silver is through multi-asset funds.
Okay.
But other than that, we don't believe in investing in gold and silver because of the fact that gold and silver has been the best performing asset class in the world at this point of time.
Right. So then how do you identify when is the right time to enter in any asset?
It's very simple. You look at very good past performance. So go back to the year 2013.
Okay.
Indian real estate was the best performing asset class. Indian equity was pretty bad for the last 5 years. So if you look at it at that point of time, it was very simple that you have to move from Indian real estate to Indian equity.
Right.
So the best way to choose an asset class, in my opinion, is if you have many years where an asset class has done very badly, then you should be positive on that asset class.
Right.
On the other hand, if an asset class has done extremely well in the past, you have to be very careful. So in 2020 was a year where it was very attractive to both invest even in real estate and in equities, because the past returns in 2020 were very, very low. In gold and silver, 2022-23 was a very good year to invest, because at that point of time, past returns in gold and silver were very, very low.
Yeah.
So at all points of time, if you find any asset class which has given you a big negative return,
Yeah.
or given no return for decade, then you have to be positive on that asset class. And I find it so difficult to tell this to people. But over the years, people have got used to hearing that from ICICI Prudential, that they are more willing to hear it from us than to hear it from others.
Right. And, I think one thing that I've realized from this response is that just how cyclical the nature of the market is. Right? If the past performance hasn't been so good, I think eventually it's going to be moving towards a point where it's going to start giving me returns. So I think I appreciate this really pattern in the movement of the market a lot more.
Absolutely. See, what people don't realize is that past returns are being very high is actually high risk. Past returns being very low in an asset class is very low risk. Okay. Now, people extend it to stocks. That doesn't work. You can't do that in stocks. You can do that in asset classes. You can't do that in stocks. Okay. So it's very important that you have to realize that it is not going to work in stocks. Because in stocks, sometimes cycles don't play in a specific stock. Today, are people going to buy a Fiat or an Ambassador? Just because Fiat and Ambassador became obsolete at some point of time, if the company which manufactured that could not have been bought like that today, if anyone going to go back to a landline, answer is no. So it is not going to work at the level of a stock. The moment people start saying, I'm going to do it at the level of the stock and keep averaging it, at some point of time, you can suffer huge losses. Okay. Whereas if you take asset classes, there was a period in 2012 when 12-year return on US was 0.
Oh, no.
And if you went to 2013, the returns in Indian equity were very poor. If you go to the situation today, Indian market has underperformed all other markets by 30% in the emerging market space. So today, is India a safer market than 1 year back? The answer is yes. But if you ask most people, they are more worried today than they were worried 1 year back.
Yeah. So if this cyclical nature is not the right way to gauge a stock's performance, then how do you understand its pattern and its movement then?
No, stock analysis requires much more research.
Okay.
And I believe that you have to do the right research. You have to look forward. And you have to think what is going to happen to that stock, what is going to happen to that sector.
Right.
There are sectors which are not going to exist in the same way.
Right.
There are sectors which are going to dramatically improve.
Yeah.
So the same kind of approach that you do in asset classes don't work in stocks. And that is something people have to recognize. There were people who, the moment you decide that I'm going to average every stock, then you're going to end in disaster. But whereas if you're going to average a country over a period of time, then it can work because countries revive.
Yeah.
But stock market, individual stocks reviving is not normal.
So then, since you've mentioned sectors now, I'd love to get your view on this. Which are the sectors that excite you the most? And are there any that you feel like it's a bubble right now and eventually it's going to burst and people are going to be then again, escaping that sector? So what are the sectors that excite you and scare you the most?
See, what scares me today is the American artificial intelligence based companies.
Okay.
And we hardly deal with them. So, it's not that it's material. I won't say I'm an expert in them.
Yeah.
So let's recognize that you're talking almost to a novice in that area.
Okay.
But if you look at the market caps of all those companies, each of them are running into trillions of dollars. And to me, it looks very, very dangerous at this point of time. When a company has $4 trillion of market cap, another two companies have $4 trillion market cap, another two has $3 trillion of market cap. So my worry is just between these four companies, you've got $14 trillion market cap.
Right.
And one of the things is, what I go back to my 2007 period when, things used to look very, very bubbly.
Yeah.
That point of time, there was a person who was giving a contract to X, that share would go up. Then that person who gave the contract to X didn't have the money. So Y would give contract to that person. Then Y would also go up, X would also go up, A would also go up.
Yeah.
These kind of things are today happening in the artificial intelligence stock space in US at this point of time.
Right.
Which shows that the risks there are high. I'm not an expert, but I would say, at the same time, I'm a person who looks at sentiment because I'm contrarian. I really worry about that area.
Right.
And on the cheap side, it's very tough to find anything cheap. So one of the rules in earlier times actually was when everything is costly, put money in gold. That has failed now. You can't put money in gold. So now you have to put some money in cash. You have to put some money in sectors like oil and gas.
Okay.
So if you look at oil and gas as a sector, has not done well globally for the last 15, 16 years. And therefore, those are the kind of sectors you look at.
Okay.
Clearly a sector which we are researching a lot, whether there'll be at all some level of mean reversion we are looking at is IT.
Okay.
Because IT stocks have done pretty badly at this point of time.
Absolutely.
So that's another sector we are looking at on the positive side. But a lot of work is still remaining in that.
Right. Okay, so you mentioned IT, but then I was thinking that I think one of the sectors that's really been disrupted by AI is actually IT. So then again, since you said
So
that AI scares
that is
you.
why I didn't say it with certainty. I said that's an area I'm still working on. Whereas I was much more confident on oil and gas because barring China, in all the other countries, still electric vehicles is a small part of the everything.
Right.
So I don't think, oil is just suddenly going to collapse or something like that.
Yeah.
So that's why I would say clearly this is the kind of framework.
Understood. We were talking about emerging markets as well. And India is one, and of course, most Indians have invested in the Indian market. But whenever we're speaking of emerging markets, people talk about Brazil, they talk about, a lot of these markets. So I was just thinking, how should an Indian investor who's sitting in India really evaluate these foreign markets and, figure out a way to invest in them and also make sure that they're profitable?
It is challenging because right now what happens is there are very few mutual funds which are open for subscription for global investing in India.
Yeah.
And to do it on your own requires more skill sets. So how do you do it? I don't know. But, the framework you still use for asset classes is look at past returns.
Okay.
Look at valuation, if possible, in very simple way.
Okay.
And look at cycle. And based on that, you take that decision. But it is going to be considerably more difficult if you've got to do it on your own.
Yeah.
If you're not going to if you don't have vehicles, because many of the mutual funds are currently not accepting money for foreign investment.
So let's circle back to you now. We call this the Net Worth Show. So I'm going to have to ask you about that. Can you tell us about your net worth today?
See, I think, what I believe is, I passed out of IIT and IIM in 1989. I had the advantage now of working for 36 years. So you work for 36 years and you have a good grip on how to invest. Although I have not been investing in stocks since I became CIO.
Okay.
I would say that, basically what happens is your net worth is very comfortable. But I think more than net worth, frankly, in my case, I'll tell you, I have a special child.
Okay.
So for that special child, I have to create a trust.
Right.
And then on that, I have to also create trustees for that.
Right.
And then I have to actually build a proper framework for that. And you have to do all those things. So I think, when people have special children, they have to think of all these things along with other things. Because from a money point of view, I would certainly say I'm extremely comfortable.
Right.
But what is important is how to handle the life of my special child at a later date. And for that, you require a trust and various other things.
Right.
So that is a bigger challenge than money in my case.
So actually, I'd love to explore on that if you don't mind. For people who are actually planning their finances, not just for themselves, but also their dependents, do you have any frameworks in mind? How do you ensure that not only you yourself, but also your family and your loved ones are eventually benefiting off of your investment corpus? So how do you go about growing your wealth for them?
See, that's where I would say on a continuing basis, you have to do systematic investing.
Yeah.
And when markets do very well, you have to be more careful. When markets do very badly, you have to be less fearful and invest.
Right.
And if you do that in simple, low-cost products like mutual funds, you will actually have a good experience over a period of time.
Right.
That has been I have worked in ICICI Prudential for 21 years. And in this 21 years, people who have followed this approach have had a good experience in compounding their monies, notwithstanding periodic bear rallies in between.
Yeah.
So the only challenge is you can't suddenly wake up and say in the midst of a bull market, I'm very positive on equities, like 2007. Then it's a problem. As long as you are systematically investing and you have a long-term approach and you choose to invest when markets correct, then I think you have a comfortable experience. It is also important that, people don't try to directly trade derivatives easily.
Okay.
Because things like derivatives, as the regulator SEBI has also pointed out, is something which generally it's not easy to make money in the long run.
Yeah.
So it is very important, that people actually practice asset allocation and don't practice any form of gambling.
Okay.
And that is what the government actually did by making these recent changes.
Yeah.
So I think it's very important to do this systematic investing, systematic saving, and whenever any asset class does very well, don't be too positive on that asset class, whether it is real estate, whether it is gold, whether it is equity, whether it is anything. And whenever any asset class does very badly, you actually try to, whatever savings you have, you try to put it in that asset class. Then in the long run, I think you will definitely create a very good corpus.
Understood. You lay a lot of emphasis on asset allocation. So I'd love to understand more, maybe with an example. So let's assume that I've just entered the workforce and I have maybe a very decent modest salary of 30,000 per month, let's just say. Now, considering that I have a good 20-25 years of working life ahead of me, how do you think I should begin my asset allocation process, and what should that look like?
See, I'm not the right person to give such an advice, but if I look at it broadly, if you did a systematic investment plan in a category like multi-asset, you are likely to have a good experience in the long run. Because that itself is invested in so many asset classes. So one asset class does well, another may do badly, and vice versa. So that is the kind of approach I would recommend. And I think the challenge is that if incomes are lower, how do you save? Because you have to prepare yourself for any bad day or a time post-retirement. For that, you'll have to save. So if the incomes are lower, you should still make that effort to save. So I think that is the challenge, that it is not dependent. You have to make an effort to save. In the olden days, when I used to grow up, there were no opportunities to spend. And frankly, the world was very different in Chennai in those days, that people never used to spend. Now, in the younger generation, there are people whom I have to say you have to save. Because today the amount of things which are available just by using your mobile phone is so much through e-commerce and various other things, so that it is important to create a saving culture. Once you do a saving culture, the investing through SIP in multi-asset category or something like that is likely to be a good long-term investment. But I think saving is first important, then investment safely means investing in asset allocation is second.
Understood. So you mentioned saving, but again, because I've been doing these conversations quite a bit, and I was thinking that I've been told by a lot of people that instead of saving money, you put it into the market, because if you lock your money in a savings account or your cupboard, eventually that money, the value of that money is going to go down because of inflation in the long term. So then how do we rationalize that?
No, I think when I mentioned systematic investing in a category like multi-asset, that is not something which has underperformed the market over the last 21 years. Maybe it will underperform the market in future, but it has not underperformed the market in the past. So it has given a good experience to investor. And saving, if you put saving and put it always only in cash, then what you say is correct. That's not what we recommended. We are saying you save and put that money in a category like multi-asset, which itself practices something like asset allocation by being invested in different things.
So basically savings is step one, and then investing, that is the second step.
Two.
Understood. So, GST 2.0 was just rolled out, and there's been a lot of simplification of slabs, and also so taxes have been cut down on a couple of goods categories too. Now, I was thinking that as an investor, is this going to have any impact at all on consumption or on corporate earnings, or is this just like a very short-lived noise, and we can tune this out maybe 2 years from now?
If you take a long term, otherwise people can just cut taxes to any level. They can say income tax is zero. They can say GST is zero. Is that possible? The answer is no. So if you ask me, in the very long run, there is a payoff involved in reducing taxes. It is not a game where you can just reduce taxes, everyone gains. Then government will be very happy to reduce taxes to zero. but they have to do a lot of things.
Yeah.
So that's why, from one angle, if you look at it what this means is that the government has favored the consumers at the cost of themselves. So what does the government have to do? The government will have to borrow more.
Yeah.
So the saver actually may get higher rates because of that.
Yeah.
So otherwise you look at it, you can bring down taxes to zero. Why have income tax? Why have GST? Bring it down to much lower levels.
Yeah.
It's not something where no one is a gainer or no one is a loser.
Yeah.
But clearly in the near term, consumption is benefited. It will have its own impact. And sometimes what we call a virtuous cycle, whereby what happens is someone buys a product, that a company spends money on something else. That company in turn, because they spend money on something else, hires people, then they pay salary to that person, that salary is spent. So what we call a cycle. So that cycle can happen because of this extra consumption, which has been happening because GST has been brought down by the government of India. So what the government of India has tried to do in the year 2025 is cut interest rates so that it benefits the borrower. They have cut income tax in the budget, again to benefit that people around 15 lakh income maximum. Then they have cut GST. What is the goal? They want to create a feel-good factor so that people spend money. Once they spend money, there's normally a virtuous cycle which leads to other things happening. And that is what the government is working for.
So can we now talk about the other things happening? I'd love to understand what the potential impact could be.
See, it's tough to say because what happens, let's say more cars are sold. Let's say more of beauty and wellness products are sold. More two-wheelers are sold. Now, more life insurance is bought, more health insurance is bought. What happens as a result of it is that each of them have its own impact. Then what happens? The car company runs out of capacity. They put up a new car project. The new car project involves a lot of buying land, investing in a building. Cement excise duty has come down. So that cement excise duty leads to lower cost of construction. So what happens is there is a cycle. When a factory is put up by that car company or a two-wheeler company, there are benefits. And in the case of life insurance, if there is a big growth in life insurance and health insurance, it is quite possible that the number of agents being employed by these companies go up. Then the amount of, let's say, the medical treatment goes up because many of the people are now more comfortable getting it. So there's a certain cycle which happens.
Understood. I was also thinking about IPOs. I think there's always been a lot of craze about it, but with the inflow of a lot of young investors, and especially Gen Zs, I just feel like that craze is at an all-time high. So I think deterring them from investing in IPOs might not be something that will eventually be efficient, but I was thinking maybe we could help them by identifying a few red flags that people should be looking out for whenever they're investing in a newly listed company.
So I think clearly, if you ask me, the regulator has tried their best to make it easy for any investor to understand what is happening. So what they have done, they have created, for example, an anchor book. So the anchor book tells you who all have invested in that IPO. So now if in some anchor books, what happens is you are in a position to find out who all have invested. If you feel comfortable, this person is invested, these are the people who have invested. So that is one way of looking at it. Then on a monthly basis, the shareholding of what all companies that any mutual fund is invested is almost available on the net today through various platforms. So if you have internet access and you know how to use it, you will know which are the stocks after listing also where the company is being held by the mutual funds or something like that. So all those things can be done. I'm not talking about complications like going into understanding the annual report, understanding the prospectus, looking at the financials of the prospectus. I'm not telling you all that because those are much more technical things, which may also help you. But I would say I'm looking at areas. Obviously, if a company's issue is well subscribed, normally that itself sometimes can be a positive. It means others have also found it attractive. So you can do these things, and these are the commonsensical. The models that we use to invest are very different because we don't look at what is in the anchor book. We are part of the anchor book. So what we have to do when we are doing an IPO, we have to do a complete research on that company. We have to do all the work on the company. then decide whether to invest in this IPO at this price.
Right.
And then we give an anchor bid, and that anchor bid is accepted and we become an anchor holder.
Okay.
As an anchor holder, we have to hold the shares 50% for 1 month after listing, another 50% 3 months after listing.
Okay.
So these are but our processes are, we will do all those technical analysis which is required, which I think I don't want to trouble the audience with at this point of time.
No, I was actually thinking about this, because there have been so many new investors and access to information has been at an all-time high. So I feel like normal retail investors have really complicated their financial journey. People have come up with their own satellite portfolios and really, subscribing to very complicated products that I think they don't fully understand. So then again, I want to understand for long term, is it better to have a really simple basic portfolio, or should you be complicating your portfolios with all of these different instruments?
So I think basically a lot of people create what I call a zoo.
Okay.
So what happens, they get themselves invested in too many things.
Yeah.
And they don't do what I call sizing.
Okay.
So because what happens is we have to size investments.
Yeah.
If you invest in 100 things, what will happen is 50 things will do well, 50 things will do badly.
Yeah.
Then you'll end up getting nothing. So what an investor has to do, and that is what we tell in ICICI Prudential, you have to size your investment.
Okay.
For example, in 2018, 19, 20, when those stocks which we looked at like PSUs, metals, telecom, they all did badly, we actually added to our position and created a bigger sized investment. So only if you put meaningful positions in some companies, actually it helps. Otherwise, you will end up, you can invest in all the IPOs.
Yeah.
After 3 years, you will realize you have 150 companies in your portfolio, but you won't know what you are doing with them.
Absolutely.
And you may have another job. So where will you find the time to track it? So
Right.
it is very important to do sizing.
Understood.
And that is why we tell people come through mutual fund. We take care of all these problems for you.
Yeah. Funny you mentioned sizing, because I was actually looking at a video of yours today on the way here. And there you mentioned that, there are 3 things that you should look at: selling, buying, and sizing. And people often focus a lot on the buying part, but not on selling and sizing. So then again, how should you go about, deciding whether or not the sizing of your portfolio is appropriate, is correct, and when is the right time to sell certain holdings of yours? So how do you figure out when to do what?
We are talking about mutual funds, or are you talking about stocks?
We can cover both. So let's first talk about mutual funds, and then
So
we
if
can
you
move on
talk
to
about
stocks.
mutual funds, that's the reason what we did was we created categories which are which invest in multiple asset classes like balanced advantage, equity and debt, equity savings, multi-asset. So in all these categories, we ourselves, have created a situation where the investor doesn't need to come out.
Okay.
They can, we call it like the hero ad, fill it, shut it, forget it kind of framework. Because you're doing asset allocation per se. So if you're investing in a theme fund and you've got too much return, you have to come out of that theme.
Yeah. Understood.
So that is the framework that we have as far as mutual. If any category does too well, after that you can come out of that category. That is why we created all these asset allocation kind of categories like multi-asset, where you can invest and then not worry, because they will always be more defensive than equities. They are not 100% in equities.
Yeah.
And in stocks, you have to be, in stocks, my theory is you shouldn't do selling, you should do switching.
Switching. Okay.
And if that is, you decide to sell A and buy B. Of course, at some point of time, you can decide to sell all your stocks and buy a building or buy a flat or something like that. And as far as sizing is concerned, it is dependent on conviction.
Okay.
So you should have conviction.
Okay.
If you have conviction, you have done all the work. The more and more work you have done, you can do sizing. You can't do sizing without doing work. There are a lot of people who buy just on the fly. Then you can't do sizing. You can do sizing where you have done work. If you are a person who does investing in stocks on your own, the stocks you should size are stocks that you know much better.
Understood.
If you don't know a stock, it's not worthwhile sizing. But if you don't have time to analyze anything, that's why ICICI Prudential Mutual Fund is there.
Absolutely. And again, I think that's one mistake that a lot of investors my age are making, where we are just, buying things that we don't fully understand simply because we see a person on the internet talking about it and saying, oh, you must buy this because this is what is going to make you rich. So I feel like there's a lot of misinformation now, and we're just complicating our portfolios to an extent that I think it's going to start hampering our returns in general.
Because the problem is not that everything is like a chakravyu. They will tell you, buy this. How many times they have called you and told you, sell what you have what I told you to buy.
Yeah.
The moment you have equal number of channels telling you that we gave a call that consistently whatever they have recommended on the buy side, they are going to tell sell at the right time, what they think is the right time. It's not that everything will go right, but at least they'll tell you to sell. Then you are in better shape. But if you see, most of the time you get a chance to know what to buy, but very few people will tell you when to sell.
Yeah.
So then you are stuck with a situation like Chakravyu.
Yeah. But then, okay, so then I really want you to be the person who tells us when to sell your holdings.
That is why I said invest in mutual funds or in ICICI Prudential mutual funds, and even there focus much more on asset allocation oriented categories.
Yeah.
Because otherwise it is a challenge, because to tell anyone when to sell is one of the toughest things in investing.
Right, absolutely.
Even for a fund manager, I can tell you, as a fund manager for 21 years at ICICI Prudential, we struggle when to sell a stock.
Right.
And there are times when you have sold the stock and the share has doubled after we sold the stock.
Yeah.
So we almost feel very, very bad. So I think the selling decision is never an easy decision.
Absolutely. So you've mentioned multi-asset funds quite a bit, and I was wondering, for a beginner investor, are these products beginner friendly? And again, because there are multiple funds in the same category across AMCs in the industry, how do you compare all of these different products when you're trying to buy them?
I consider all the hybrid funds as beginner friendly.
Okay.
Whether it is multi-asset, whether it is balanced advantage, whether it is equity saving, whether it is equity and debt. We consider all these asset allocation oriented, which means you invest in both equity and debt, at times equity, debt, gold, silver, InvIT, REIT, etc. are the most friendly for beginners. That's how we look at it. And definitely, I think till one down cycle you have seen, and you know how you behave in a down cycle.
Yeah.
I think these are very good beginner products. Once you have seen a 20% fall in the market, then, and you know how you have handled it, then after that, in the next cycle, you can do a lot of things.
Understood. So I was looking at the news the other day, and I saw that India and China, they're trying to come up with, alternative payment systems to basically center away from the dollar. I want to know your opinion on this. Is this something that you think is just going to be an attempt, or will this actually work out? And if it does, are we going to see dramatic changes in the way that people are diversifying across global equities?
No, I think if an alternate currency comes to the dollar, it would be a big change. But I don't think there is any alternate currency coming.
There's not.
I think still it is dollar is important, but but I would say that the US economy has a lot of debt, lot of fiscal deficit, etc. But I don't think there is any escape from the dollar in the near term. I think for the next decade or so, there is no alternate currency you can use. But I think the reason gold has done well is because some of the central banks have converted currency to gold. And that is the reason why it has done well. But I don't think, as of now, if you look at it, I think gold has done well because they see gold still as an alternative.
Yeah. And I was thinking, when I see news like this, do you think that retail, normal investors should be really worrying about all of these tariffs and GSTs and alternative payment systems, or what's happening in, another part of the country or the world even? So do you think these are things that should concern retail investors, or should we just maybe look at it from the periphery, but not really focus on it?
See, one of the things that at CIO at ICICI Prudential, I am bothered about what happens in Turkey, what happens in Japan, what happens in US. Now, like that, if you have created a portfolio which is like a zoo, you will have stocks which will get negatively affected.
Yeah.
When we are managing other people's money running into 10 lakh crore, we have to be bothered about everything. The first thing I do in the morning before I brush my teeth is see what tweet has come from US president.
Oh, yeah.
It has become that.
Yeah.
In the recent past, that has been the thing which you focus on every day in the morning.
Exactly. So that's what I was trying to understand, because I think there's a lot of anxiety around this. Oh, now what is he going to tweet?
Yeah.
So people are always on their
So
phones.
the first thing you do in the morning, because then you know what today is going to happen, what is going to happen to this sector, what is going to happen to that. That is how it has been.
Yeah. So as of today, I was just taking a look at the news, and I saw that he's tweeted that, movies that are shot outside of the US, now there's going to be 100% tariff on that.
Yeah.
So, but then again, what do you do with this?
Correct. But it affects us. We are affected by everything.
Yeah.
If something goes wrong in any part of the world, we have some impact. I can show you today companies which are operating in so many countries that we today immediately will track which company has a position in that. See, we are managing other people's money, which is large. So at all points of time, there is something happening. There is never a dull day, actually.
Absolutely. But then again, I think that's very subjective to you, because you manage money for so many people. But then again, should I be worrying about all of this?
Actually, from an investing point of view, unless you are invested in ICICI Prudential Mutual Fund, I think you need to worry about, see, you can't be a direct equity investor and say nothing affects you.
Yeah.
That's not possible.
Right.
Because either you worry about it directly or you worry about it through us. Yeah. So it is my job and my colleague's job to worry about the money that has been entrusted by you. Yeah. One of the two. One of us have to worry.
Yeah. I think I should be worrying more about my career and my work instead of what Donald Trump is tweeting right now. Understood. And I just want to understand, since you have spent such a long time in the market, what's been your biggest learning that our audience should be taking away from this conversation?
Yeah, I think people think investing is something which everyone can, you require big skill sets to learn. Actually, if you can understand cycles and understand that very bad past returns is positive and very good past returns is something to worry about, you can take meaningful investment decisions. It is not rocket science. You only need temperament. So, I had the unique opportunity once in a group of 400, 500, we met Warren Buffett once in India, possibly the only time he came to India. So there's a question a person asked him, what did you learn from 4 decades of investing? He said that in 4 decades of investing, there were 4 times when he bought very big. And like that, what happens, there is a year in one decade where you have to buy very big. And that is again a function of temperament. And so I believe that people are obsessed about trying to make money every day. It is not possible to make money every day in the market. It's not possible to make every month in the market, every year also in the market. But if you think long term and you decide this is the year to buy, this is the year to sell, and you do it in a systematic manner after thinking of how much past returns have come. It is not rocket science to know that in 2008 December markets were cheap. It is not rocket science to know that in 2020 markets were cheap. So it was very easy to buy then. You had to only act at that point of time. So I believe investing is a function of temperament. And to improve temperament, you can follow asset allocation. Asset allocation means investing in asset classes which have done badly and taking out money from asset classes which have done very well.
Understood. I think that we've got a pretty good framework now, and I just want to thank you so much for being here on the show and giving us your time. And like I said, I think my biggest takeaway is definitely going to be that I need to allocate my assets better, and that's going to be my my holy grail when it comes to my portfolio.
My pleasure.
Thank
you for the opportunity for the podcast.
Thank you so much, sir. एंड यू टू, आई होप आपको ये कॉन्वर्सेशन पसंद आया हो. आपका सबसे बड़ा टेक अवे क्या था, मुझे कमेंट्स में ज़रूर बताइएगा. अब मैं आपसे मिलूंगी अगले हफ्ते विद अनदर गेस्ट, सो टेक केयर अंटिल देन.
Investment in the securities market is subject to market risks. Read all the related documents carefully before investing.